Okay, so this is going to be a video on how I trade. I've been asked by some people I know personally to talk about this because this is going to be very in depth. I'm going to start from the beginning. I'm going to start with technical analysis. I'm basically going to start by talking about the foundations of this stuff, even though most of this is information that can be Googled. The reality is that the majority of things you're going to find online include information that is going to mislead you in some type of way. So my goal with this, and maybe I won't do a perfect job, but my goal with this is to um, present this information in a way that anyone can understand and that is free from all the BS that typically is uh, promoted and put in your face and all that kind of stuff. So, first, I'm going to talk about the absolute basics of technical analysis. And this is what you need to know before you even start thinking about a strategy or a method or any way of making money. These are the things you need to know before you do any of that. Okay? So, first, we want to think about a chart. That's the absolute foundation of everything that's done in stock trading is charts. This is a chart. Why do we use a chart? Because it plots price and the price action. So here you can see I have SMCI. I've got the 5-minute chart right here. And then here's price moving throughout the day. I'm going to get into what every single piece of this means. So we know that a chart depicts the price a stock moves on a given time frame. So here's the 5-minute chart. Every bar here is 5 minutes. Here's the 15-minute chart. Every bar here is 15 minutes. 30-minute, same, you get the idea. Hour, 4-hour, daily. We get the idea. So that is what a chart is. And to trade in any capacity, you need to have a chart. So what is the best style of chart? So there's a lot of different styles of chart, actually. Let me bring this up. So here we have a typical candlestick chart, as you can see. But there's a lot of different, let me see where it is, styles. So let's start with some of the most useless. So here's a line chart. I've got a few indicators on here, so it might be difficult to see. But this green line moving here is the price. This is pretty much useless, and not really any traders use this. There's not a lot of information you can get from a chart like this, and it's not recommended to be used. This, I actually have no idea what it is, but it's another style of chart. This is a type of chart that uses candlesticks, but attempts to show some type of trend movement. I have no clue, actually. And then regular candlestick charts. And then we have one more, which is something that is used by some people who are successful, who find that it can sometimes tell you when trends are changing, maybe make price easier to see. So this is a, what is it called? The Heiken Ashi candlesticks, which, to my understanding, when you get an HA reversal is when you get a flat bottom after something like this. So I don't know, something like this on this 2 o'clock candle, and then it reverses upwards. And as long as you're seeing the flat bottoms, that is a continuation of the trend. When you don't see the flat bottoms, that could be a reversal of the trend. That's my understanding of it. Could be wrong, but I don't really use that too much. I find that I like to see the nitty and gritty of everything. I like to see the candlesticks. So what are candlesticks? That is a good question. So first, I pre-drew this. I know this is like 3rd grade drawing here, but it's important to look at. So first, I want to deal with this first candle on the left here. So this, it's typically going to be all shaded in. but I don't need it to be shaded in for what I'm going to be talking about here. So um, candlestick, the candlestick style is what you're going to be using with trading. It's pretty much what everybody uses, and it's going to tell you the most information. So first of all, the red candles and the green candles are different, and I'll explain why. So the green candles, the open, that means, so if we're looking at a 5-minute chart, let's say it's 9:45. When the clock goes from 9:44 and 59 seconds to 60 seconds, and we're at 45, a new candle will appear. And for a green candle, when a green candle is closed, the bottom of the green candle, where you see that border, whether it's here or whether it's the bottom of the green candle here, on this level here, is going to be the open. And the top, let me just write it down. I know this is awful. I'm on using a mouse on MS Paint. What do you really expect? The top is going to be the close. So this is the close. Okay. So it's actually the opposite with red candles. Red candles, so this is, again, this is what you can tell after they've closed, because what can happen is this, and I'll get to that in a second. But let's pretend these candles are closed. So this is the previous candle on the chart. So the red candle, actually, this, the top is the open, and the bottom is the close. So this is probably one of the most bullish candles you can have here. This green candle right here is the most bullish. And this candle is the most bearish. So most candles are not going to look like this. I would say what most candles are going to look like is something like this. So let's say it opens here, it retraces downwards. Let me just indicate that so you can see. I don't know if you can see the mouse on the screen. So it goes downwards and then it pops back upwards after. So that candle would look something like this. So you would have this, and then you would have a little bit of a tail here. The tail, what that does, that is completely unreadable. I'm so sorry. Let me fix that. Okay. Fuck. I don't know how I was doing it before. There we go. The tail. I know this is awful. I'm sorry. The tail is a representation of the movement of that candle. So that means this candle opened at this point here, went down to this point right here, and then went back up again to this point right here. So that is how candlesticks work, and it's the opposite for a red candle. This green candle here would represent a very bullish move. And this candle right here would represent a very bearish move. Okay, so that is the basics of candles. So when you look, I can show you on a chart. So when you look here, let's zoom in. This candle right here opened right here, moved down slightly into the body of this candle, and then took off and closed all the way up here. Went a little bit higher, pulled back, closed right there. This candle opened almost exactly where this candle closed, went up a little bit more, and then sold off to this point, to about the halfway point of this candle, maybe a little bit less, or maybe a little bit less to the upside. So not quite half. But then this tested a little bit lower. So this next candle here It opened right here, went up to the previous day's high. This is what that dotted line is. And then it moved down, pulled back a little bit, and closed right there. So I hope that can kind of help you get the idea. If you still are confused about it, just look it up, because this is the basics, and this video or video parts is going to be, it's going to be probably the longest video I've made yet, because we're going to be getting into very heavy detail here. Okay. So next we want to talk about volume. Why is volume important? So volume can help tell you a lot about a move, let's say. So here we have SMCI. Let's take a look at the volume on the daily chart. So we've got I'll get into this indicator later, but basically just think of this blue line as an indication of when volume is above or below the average volume. So most of these are above average. In fact, why don't we look at this? That's a little bit more of a specialized indicator. Let's take a look at, and let me just change this to present day so we have accurate information. So let's look at SMCI. Okay, so here we have, I think this is a 20-day, 50-day average. Okay, so let's zoom in here a little bit. So as you can see here, we've got volume. Now, this is a huge move here from 330 to 1200. So this is not a typical move, but you want to pay attention here. So let's go back here. Okay, so let's go back really quick here. Let's take a look at the volume. This is back when it was compressing a bit. If we zoom out, we can see that clearly. We can see the compression staying in between. Oops, the hell did I just do? Okay, what the fuck? Okay. Okay, we can see that there's a compression staying in this range here. So let's take a look at the high volume candles. And what you want to do when you have candles like that is you want to compare it to the price action. So here we've got a pretty high volume candle, but it doesn't go anywhere. It just ends up bouncing off of the bottom of that channel. So that's not something we really need to focus on. Here's a high volume candle here. Again, it's still in the channel. What you want to look at here is you want to see if the next candle is going to break out. It did not, so we can ignore that. And look at a high volume candle here. This one did break out of the channel, but again, we want additional confirmation. So the next candle did not, went right back in the range. And we have a breakout here on high volume. Well, these two days here are high volume, above average volume, I would say. This one goes right up, this one goes after. So, if you wanted to start getting into a position here, you actually did have the confirmation. So that would be on SMCI, that would be on January 9th of this year. You had confirmation to start getting into a position that was breaking out of the compression. And we actually had additional confirmation here by these red candles. What I mean by that is we had a red candle, red candle, red candle, red candle. So that's 1, 2, 3, 4, 5, 6. 6 red candles. But let's take a look at them. Did they go back into the range? They did not. And then what happened? Let's say you start a quarter position here. Let's say you're looking at a longer time frame. This bounce right here on a gigantic volume. So right before this, the highest volume candle we had was 7.2 million on the volume. This candle was 22 million. This is fucking crazy. So this is also an insane move. It went from an open at 346 to a close at 423. That's incredible. So if you were doing a long-term position here, I would go all in with the size on the position, not your account, with the size on the position. I would go all in on this candle. And sure enough, what what would we be looking for? We'd be looking for a warning candle that has higher volume than the rest of these building candles. So that would be this candle here. You want to always see if the volume matches up with the price action. So here we have a candle that's 33 million on the volume, and it's a giant engulfing candle. We went from an open at 1045 to a close at 805. That's catastrophic. Um, that is an incredible amount of money. But let's be real. If you entered at 421 and you're getting out at 801, I mean, you made over $300 per share profit. Now, that's an extreme example. That almost never happens in the market, that you can catch a move like this. This is just what I had up because I was looking at it earlier. Um, but that's how you look at volume. I know I just used a lot of concepts that I haven't gone over yet in this, but we'll get to them. I just wanted to briefly explain what volume is. Volume just tells you how much shares are traded on a candle. So on a daily chart, you're looking at in the multiple millions. Let me go back to that. And on the 5-minute chart, you're looking at probably tens of thousands per candle on a stock like this. So yeah, 123,000, 52,000, 65,000, 72,000. That's quite a lot. That's quite large volume. So that's basically what volume is, and volume analysis is determining, if candles are important based on volume, based on their price action. Like for example here, I'll just give a 5-minute example. So here we've got the highest volume candles are in the first about half an hour. This is yesterday, so that would be 416. So basically we're looking, if you wanted to see a breakout here, you'd be looking for a candle that broke above this high here that showed volume at or above these beginning candles. And the reason why you don't necessarily need it above is because the 30 minutes is always high volume. It's always volatile, and that's why it's a good idea to wait 30 minutes before you start trading. So this candle here was higher volume than anything besides the first 30 minutes. So it's about 100,000 shares. So that's this candle here. So that's the 210 candle. And sure enough, it breaks out above that high set in the first 30 minutes. So then what do you want to do here? So basically, when there's a long candle, you want to make sure that it's not a solo. So you would be waiting for a close of the next candle, which went to about the halfway point. So then that makes you think, okay, I'm glad I didn't get in. Let me wait. So what would get me out, or what would make me not want to go long anymore? What would make me not want to go long anymore is a red candle that had higher volume than this candle, and that took me with the price action below this candle. I want the bottom of this candle to hold. So basically we've got a couple red candles that get to about the halfway point, can't really close below the halfway point. Then we print a green candle. So what this tells me is that the halfway point of this candle held, the bottom of this candle held. I would buy right here, 935.82. Sure enough, do we ever get the warning candle? And that would be no, we do not ever get the warning candle. You'd be on high alert at 335 with this candle right here that rejects the high of the day and then closes on its low. You'd be on high alert. I would be ready to sell right then, but I would wait to see what the next candle does. If the next candle starts opening lower, maybe I take gains because, I mean, let's be real here. This is 935 to 955 on a day trade. That's an incredible profit. So I would not be looking to get greedy there. But then the next candle opens. It can't even really get below that previous candle and then takes off further. So basically, you have a home run trade here. Now, again, this is not typical. This is not typical in any fashion. This is crazy. I mean, this is not your average everyday thing. This is not a setup you will find every day. This is a setup that, comes around once in a while, and if you can take advantage of it, great. If you can't, that's fine. There's always going to be another trade out there, but this is not your typical setup. So don't think that you're going to come in here and find $20 home runs every day. Or, I mean, what is this? This is even more if you go to the high of the day. 35 to, let's say the last candle, 76. That's way more than $20. So don't think you're going to find these every day, because you're not. It's not going to happen. So, okay. Okay, so I kind of already was getting into this with what I was talking about earlier, but the next part of technical analysis is understanding the story behind the candles. Now, I actually want to go through this with using SPY. So, because the reason being is that analysis of the market will allow you to put yourself in a position to basically always be on the right side of things. The reality in trading is that you're constantly fighting against the market, essentially. So, or that's not what you want to be doing. So, what you want to be doing is you want to be going with the market. So, in order to do that, you need to be able to read price action and tell the story behind it. Okay, so let's go here. Let's go to Monday. So right here. Okay, well actually let's look at the daily chart first. Okay, so as you can see here, let me just talk about this on the daily chart, and then we'll go to the 5-minute. Do a couple examples here and talk about it. So firstly, if we zoom out here, you can see that this is quite the incredible uptrend we've been in. We set a low in October of 2023, and then once we broke out in November, we've just been kind of chugging along since then. This is the first significant pullback since we've had that move. So there have been a couple candles along here that have been warning signs, and that have led, that should have been like to cause some thinking to go, okay, let me wait to see what happens. So I'm just going to go through a couple of those. So first, we want to look at this candle here on December 20th. So basically, what we have here is this. We've got a significant move up from lows starting in November. So we've got a nice move here. And then what happens? We've got a rejection of the high of the year. Is that the high of the year? I don't know. But we have a rejection of the recent highs, and then an engulfing candle. This is a massive warning sign. What's the story here? Okay, the story is that, okay, we opened in the middle of the previous day's candle. Great, fantastic, beautiful. That's a great setup, because then we know we can get some seriously good price action that day. It's not a gap up, which we have to be cautious of a reversal. And it's not a gap down where we have to wait 10,000 years for it to fill the gap upward and then maybe get a chance to go long, but probably not. So we're in a good position here. We open in the middle of that candle. That's great. Then it goes to a new recent high. Fantastic. You're thinking bullish. You're thinking, I'm going to get long here. Then it gets smacked down. Okay, let's wait and see what happens. Then it gets smacked down further and further and further, and finally closes down here. So what did that do? It engulfed the last 3 days of price action, and that should be a warning sign to you. That tells you, okay, this is a problem. This is very dangerous, and I should temper any expectations moving forward, and I should possibly consider not taking any longs until this is resolved. Right? Should be right. So, okay, the next day, what happens? We do not continue the selling, and we close about a little bit above the halfway point of that red candle. Okay, that's good. The next day, we open about here, which is in the tail of that red candle. We test that again, rejects it again, moves down, tests this candle, rejects that, moves up, closes about where it opened. This is a slightly bullish thing. That tells me, okay, the market's not ready to make a new high yet, but it's also not ready to sell off. That tells me, okay, my bullish positions are safe. I don't need to worry yet. Okay, so then we get normal price action, a little bit of a pullback here. No major warnings here, no giant high volume engulfing reversals. So overall, this is going to just be a simple dip, and then we'll see what happens. Then obviously we can see what happens. The next warning sign is this. The next warning sign is this candle on January 31st of this year. Reason why it's a warning sign is once we reached new all-time high, or probably close to it. I'm not sure if that was all-time high actually. But we engulfed a lot of the previous days. Same as before, we opened here and we closed here. You know, the reason why that's a problem is because we've engulfed so many of these days. It took 1, 2, 3, 4, 5, 6 days to go up and 1 day to erase all of them. That's a big warning sign. That tells you, again, same thing as the other candle told you, temper expectations, think maybe I should not get too hard on the long side here, and let me wait for this candle to be resolved. Sure enough, the next day, same as we talked about before about solo candles, they either need to be resolved or they need to be continued. And this was resolved. An engulfing candle the exact next day for a significant engulfing candle, maybe even above the high, open 488.62, close 489.20. So yeah, this actually closed above the open of this candle. So it engulfed the full candle, and that's very bullish. So on this day, I'd actually feel kind of comfortable going long again. Sure enough, what do we see? We went long. The next major warning sign candle would be April 4th, which was only a week or so ago. This is a much greater warning sign than all the rest. The reason being is this. So first of all, it attempted to get to recent highs up in the 520s, and it rejected hard, sold off significantly. It sold off. This is a giant candle, and we have not seen a candle like this in months, many months. So it's not just the volume, which is high, but it's not super high relative to these other candles, but it's the amount of movement. So we've got an open around 523.44. We have a close around 513.44. That's a $10 move. In terms of the stock market, that's an extremely significant move in the market. Now, this is a huge warning sign, and this should be telling you, oh my God, I need to even maybe take gains on the stocks I have a profit in still when I can. Now, the market gave you that opportunity a little bit the next 3 days when the buyers attempted to keep it up here. That's what these candles tell you. So what happened here? We opened close to the close of the previous day. We tried to get up there, rejected a halfway point. Danger, danger, danger. That's again a bearish sign. The next day we basically did nothing. This day we opened here, went all the way down. Buyers defended it. It closed up here. And then starts the problems. This candle was a bull trap. It made it look like, support might be in because it's been defending this range. And then it went and closed up here, but it did not work. The next day opened lower, closed lower, and big engulf on the 415 candle. Now these two candles, now we've got two candles, two large engulfing candles. What does that say? That should tell you I should not be thinking bullish at all. I should not be even looking at the long side of the market. I need confirmation of an upside reversal. If I don't get that, I should only be thinking bearish trades. This candle should have had you start thinking of bearish trades. This candle confirmed that you should only be thinking of bearish trades. Now, what would I need to see in order to consider the long side again? I would probably need to see a close above here, a bullish close above here. Now, could we get that today? Maybe. Could we get that tomorrow? Maybe. Could we get that Friday? Possibly. Could we get that next week? Maybe. Could we also drop to here or here? Maybe. Probably just as likely. Maybe not just as likely, but has the same chance of happening. So who knows? But the point is, you need to be able to read this story here, because how beneficial would it be for you if you were able to see this big engulfing candle and go, oh my God, that's a warning candle. Let me be in take gains mode. Okay, so this next candle comes in, and let's say you're in a lot of strong stocks, so they go and jump up, and because they think, oh, it's just an overreaction, whatever. Then you have profits in a lot of your stocks. Take the profits. Take the profits, because you know that that's a warning candle. And okay, if this candle closed above here, sure, la-di-da, we're good. You know, that was just a fake out. That was just an overreaction. No big deal. But we didn't do that. So that's where you're taking gains. Then on this big candle here, you're thanking God you took gains. You're like, my God, thankfully I was smart. And I saw that for what it was, as a serious warning, and I took gains. Because if you didn't, this is painful, and you're going to be taking a lot of losses in throughout here that you could have avoided had you taken those gains earlier. So that is how to tell the story of what you're looking for on the daily chart. Now let's look at the 5-minute like I brought up originally, but wanted to go through the daily first. So we're going to talk about the same thing a little bit, but just on a smaller time frame. So this is going to be helpful with day trading analysis and stuff like that. So first of all, let's think, right? So this was 4:15. I think this was the day where we had the big sell-off. So what do we have here? We've got a gap up. I think this was over the weekend. Yes, it was over the weekend. So we have a gap up off of news of war, which is always interesting. And what are we looking for here? So anytime you get a gap up or a gap down, you want to look for a move towards the close of the previous day. Now, let's look at that here. So right now, we get a gap up and we get no lift. We get no upward momentum here. Okay, so that should be a warning sign. We're just hovering around VWAP. Okay, so that should first tell you that, okay, I really do think we're going to test that close the previous day. I'm not going to do anything until I see that. So sure enough, big red candle about 30 minutes into the market, a little over that, and then we get follow through. So this is telling you should only be really thinking bearish here. But because we could get a bounce off the close of the previous day, off the gap fill, you don't want to do anything yet. You need a confirmation that that's going to get broken down further. So what happens here? So we get sell-off, we get some more selling, and then what happens? This is the previous day. So we got a little bit of a bounce, tiny, tiny bounce off from that gap fill. So what are we looking here? To feel bullish, we would want to see a move above back to the highs of the day, then rest, and then a continuation. That would be bullish. That would tell me, okay, the high or the support looks like it's in. It was just a gap fill. It was nothing more, and we can focus on the long side. That's not what happened. Could not even get to VWAP. This pink line here is VWAP. Could not even get to VWAP. It's sold down. Okay, so now we're at gap fill again. Boom, right through it immediately, no hesitation. Maybe a little bit of hesitation. The smaller candles indicate more hesitation. The longer candles are more conviction. So maybe a little bit of hesitation, but We did go through that level, and then, so keep in mind, gap fill is right here. This green candle cannot even get to where gap fill is, and then it starts really printing these bars. Here, when you break down here below the low of the previous day, that is your confirmation. This candle here. This candle here is your confirmation. Get short. It's the time to get short on your day trade shorts. So let's say you're taking some day trade shorts here. Boom, boom, boom. We're going lower, lower, lower. No closes above this, I believe it's 8 EMA. Let me just check. Yeah, it's 8 EMA. No closes below that 8 EMA. So that's telling you that this selling pressure is significant. This is no joke. We're in sell mode. We're in bear mode. That is the story that you need to be looking at in these charts. If you can't look at something like this and be like, okay, buyers and sellers are paired off. Okay, sellers have the ball. Okay, sellers still have the ball. Okay, buyers get a chance at gap fill. Okay, sellers took the ball again. Oh, they blasted through the low of the previous day. Now we're in sell mode. Now this is a confirmation. This is when I have talked about in a lot of my videos about confirmation. You always need confirmation. This is your confirmation. These candles here that are blasting through the low of the previous day, that's confirmation. All of this was confirming that this move would continue. Now, if we had chop, 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 and we were just testing it with wimpy ass candles, maybe I wouldn't say that's confirmation. But the thing is here, what do we have? We have constant lower highs. There is not a single point here where we could say that it was bullish. Maybe up here at the gap up, we could say, okay, maybe this is going to be bullish. But the reality is, it never even came close to revisiting that point. And in my opinion, I would have to say that there's absolutely no way I would look at this as anything other than bearish unless we revisited this level and moved above it. That would tell me that maybe the market's thinking bullish, but it's not. There was absolutely nothing to indicate any kind of bullishness whatsoever here. And, you know, this first rejection of VWAP confirmed it, and this blast down through the low of the previous day confirmed it further. That was the double confirmation, and I would have gotten short here if I was trading this. Okay, so the next part that I wanted to go over here was patterns. People talk about patterns a lot, and oftentimes it means absolutely nothing. So, someone will say something like, oh, if you see the, M pattern, it's going to go down. Or if you see this pattern, this is going to happen. Basically, anytime, if someone tries to tell you that they trade and make money by seeing a pattern on a chart and then buying or selling based on that pattern, they're completely full of shit. Because that is such a simplification of things that it makes absolutely no sense. So I'm going to give you an example of how patterns can be helpful, but it's the what's behind the pattern that makes it helpful. It's not the pattern itself, because that doesn't make any sense. That's just fantasy world. So I'm going to give you an example using the market here. So first of all, I'm not going to give you an example of like something that actually happened, but I'm going to show you what could have been. So yesterday, this was SPY. We had a slight gap up, which was filled, and then further selling down to a little under 500, bounced off 500. So here's the pattern that myself and some others were looking for. It didn't end up materializing, but I'm going to explain the pattern that we were looking for, and I'm going to explain why it would have been significant in this case, but in other cases, a pattern is not so significant. Again, the reason why a pattern can be significant is the reason behind the pattern, not the pattern itself. So, okay, let's say here we saw the bounce off of 500, and then we saw a little bit of a retest down here, and then it went through VWAP, took off. That would have been a double bottom high or low. Now, the reason why that would have been a relevant pattern in this case is because of the story behind it. Just like what I was just talking about with candlesticks and how you have to understand the story behind the actual chart. So that's why it would have worked. So the story would have been this. Story would have been, okay, 500 is a major psychological level. Buyers stepped in at 500. They tested VWAP, failed at VWAP, went down a little bit, found support above 500, and then were able to take out VWAP. The reason why that would have been significant is because before we're finding support at 500, let's say we're finding support at 501. That's saying, okay, buyers tested the upside, failed, and now they're defending the downside and able to defend that level as well above the previous level of support. So that's the story behind that and why that pattern would have been significant in that case. But there's a lot of times where, people look at certain trades and, I can even just Google it, honestly. Let me see here. Stock patterns. And I can go through these and tell you why it makes no sense. Okay. Let's go here. I'm trying to make something big here. We can get to the website. Doesn't really want to do that for me. Let me see if I can zoom in here. Okay. That should be visible, right? Let me see. Yeah, you can see that. Okay, so let's say here, I'm going to go through all these and explain why, if they have a story behind it that makes sense, they'll work, and if they don't, it doesn't make sense. So these are some decent patterns actually. So first we've got they're calling this a flag. That's the thing. They want to coin all these terms here, but this is just, let's just say there's a bullish move up, we get a consolidation, and then we get a continued move. I mean, calling this a flag is kind of a joke. Um, Pennant, again, this is just a consolidation. It's like in all of these cases, you'd be so much better off being able to read the price action and say, okay, you know, so a lot of these are just like consolidations that the price is breaking out of. Sure, you can look for stuff like this, but this isn't like something where I would just like draw some lines as they're doing here and then be like, "Oh my god, I got to buy as soon as this happens." It's all in context. Like, where is the stock looking on the daily chart? Where's the stock looking on the 5-minute chart relative to the rest of the price action of the day? What's the market doing? You know, a lot of people, they show like something like this and they say, "Yeah, if I see a stock doing this, I'm in." And it's like, okay, what about like the 100 other variables that we need to look for when trading? It's like, okay, guess we're just ignoring all that. Cup and handle, I see so many people talking about this, but in reality, fuck this. Like, what do you need to call it a cup and handle for? Like, let's just pretend this is a daily chart. Okay, we have a high set pullback, consolidation, continues to move up, a little bit of a pullback at the high, and then a breakout. Fuck a cup and handle. Just call it a fucking breakout. It's just a breakout. That's all it is. It's literally just a breakout. Okay, we tested the high twice and we broke that high. Oh my god. Cup and handle. Oh my god. We got to call it something. It's just a breakout. Don't stress so much about calling it something. It's just a breakout. It's not a big deal. Triangles can be helpful because if you can draw a triangle, usually you're going to get a move outside of it one way or another. But again, if you look at this, we have high pullback, high consolidation breakout. So it's just a consolidation breakout. It's like, why do we need to call it an ascending triangle? It's just a breakout. So, I think you kind of get what I'm saying here. It's all about price action reading. You don't want to like, what the fuck is this? Like, this looks like gibberish. Like if you can just read what candles do, like here, you don't need any of that. It's like okay, I don't know. Like you can just read the price action. You don't need to be drawing all this stuff. So that's that's what I have to say about patterns. I would say that one thing that I've heard before is that if you get a doji candle like this, typically you'll have a move in the trend the next day. I've heard that before, and I've definitely seen that. You get that right here as well. But like other than that, whatever. Like just learn to read the price action because that's going to serve you so much better than thinking and obsessing over all these stupid patterns that, they're not going to serve you well. You're going to be searching for them left and right. You're going to be drawing lines all over your charts like you're schizophrenic or something. And then what's going to happen? You're going to end up just losing money anyway. So, what's the point of that? Okay. So, next, I want to talk about the indicators that you use on a chart. Those are very important because indicators basically use math in order to um, draw some lines, draw some whatever support levels, maybe some relative strength, whatever, and basically do things that would otherwise take you too much calculation to show you instantly. So I'm going to go through which ones I personally use on all my charts, and then we'll go through some specialized indicators after that. Some of them are paid, some of them are free that you can find elsewhere. But basically, let's go through. Let's start on the 5-minute chart because I use different ones depending on what time frame we're on, and I also use different ones depending on what platform I'm on. Just so I have certain indicators on certain platforms, I'm not, making a chart unreadable by putting too many indicators on it. So first, let's start with the 5-minute chart. This is Option Stalker Pro. I've talked about it in my previous videos, I think. Well, I know that I will not trade without Option Stalker Pro. It's fucking amazing. But let's talk about indicators here. So on the 5-minute chart, I've got the VWAP, volume weighted average price. This usually is a pretty good indication of support and resistance. If you see a stock constantly reject at VWAP, that's going to be weak. Or if you see it constantly bounce off VWAP, it's going to be strong. Let me think if I can think of a stronger stock yesterday. Let's see if Google had a decent time. No, it looks like that was, still fairly weak. Not as weak as the stock I was looking at, but you get what I'm saying. So I use VWAP. I use that on the 5-minute chart. You can see it over here as well on SPY. I also use it on SPY. Then I've got the 8 EMA, which is this kind of purplish pink line right here. I use that as, so that's the 8-period exponential moving average. Basically, I just use that to see if price is going to stay above or below it, if it's going to bounce off from it. I don't use it too much on the 5-minute chart, but I do use it a lot more on the daily chart, and I'll get into that in a second. So the next indicator we're going to talk about is, and we're going to move on to the daily chart because there's some indicators on here that are exclusive indicators, and I want to talk about that after when I talk about specialized indicators. So besides the VWAP, besides the EMA, I also use simple moving averages. I like to use those on the daily chart. I like to have 3 of them. I like to use the 50 SMA, the 100 SMA, and the 200 SMA. In general, these levels provide some type of support and resistance on average, and they're usually fairly significant levels that need to be at least given some type of attention in order to make sure that you're not doing something stupid like shorting right above a support level or going long right below a resistance level, things like that. So that's why the 50 SMA, the 100 SMA, and the 200 SMA are things that you always need to have on your chart, and you know, you definitely should not have those. This right here, this thick red line I have here, as well as these dotted lines, is called a VWAP E. What that is it's anchored VWAP for earnings. So what that does is the Option Stalker Pro does it automatically, but if you don't have Option Stalker Pro, let's say you have TC2000, what you want to do is you want to click the anchored VWAP. It's on the right panel somewhere, and then you click on the bottom of the earnings candle. That might be actually down here. Um, just play with it. If it looks like mine and you do it on this candle, good. If it looks like mine and you do it on this candle, then do it on the candle that actually is the earnings reaction candle. I don't remember which one they do it off of. And then these dotted lines up here are the one standard deviation away from the AVWAP-E line right here. I find that AVWAP-E as well as the AVWAP-E one standard deviation seem to act as support and resistance. Sometimes stocks will often stay within the range of their AVWAP-E, as you can see here on ZS, and then it finally breaks down, and then we get accelerated selling. So that's why I use it. I find that it does work, and it does act as support and resistance. You can see right here. Let me back up. We've got AVWAP-E that's anchored over here. Sure enough, this finds support right on the line. And then when it breaks out of the one standard deviation, it increases on the selling, finds resistance, pulls back, bounces directly off of AVWAP-E, and then continues. So that's something I have observed quite a bit, which is why I like to have that on my chart, because I find that it does give good indication of support and resistance. So for those who are watching who are from like the Real Day Trading Reddit or from One Option, these next two have seen a little bit of controversy, at least in the Discord. So I don't care, but I'm going to talk about them. So right here on TC2000, I have two indicators I like to use on TC2000. One is pivot points, and the other one is the cloud. So what are pivot points? It's a great question. I hardly know what they are, but I can tell you what they are. I did do some research before I did this video. I'm not completely moronic. So what pivot points are is sometimes they can be they're always support and resistance levels. That's the first thing. So let me get that out of the way. There's support and resistance levels that are automatically calculated. They use some type of formula. Every platform's a bit different, and they can be two things. Typically, they can either be previous highs and lows of certain candles that are likely to act as support and resistance. And they can also be psychological levels or algo levels that the at least this platform is able to calculate and determine that either retail traders or institutions might see these levels as significant. And I have been testing this for quite a few months, and I've found that they really do seem to work in terms of intraday support and resistance, daily support and resistance, and even weekly support and resistance. So I personally am a fan of using them. I know that others might disagree or say that I should just be trying to find these levels without them. Well, I do that. I do that before I look at this. So whatever. I think they work. I like using them. The second indicator on TC2000 I like to use is the cloud. So the cloud is basically similar to pivot points in that it is a combination of possible support and resistance levels. And typically, the way the cloud works is if you're above the cloud, it's considered to be bullish, and if you're below the cloud, it's considered to be bearish. Um, that's a pretty simple explanation, but that's basically all you really need to know about it. There's times where stocks bounce right off from it, like Nvidia yesterday. It went right to the cloud and stopped. Also happens to be where the 50 SMA is, very close by. So that is what the cloud is. And then when you're in the cloud, it's kind of like you're in a chop zone. So you can kind of see that with SPY. We are currently in the cloud on SPY, which we haven't been since November of last year. So the price action intraday here has been quite choppy. And anyone that's monitoring it day by day can tell that. So that's another indicator I like to use. Okay, so now we're going to get into some indicators that some are exclusive to Option Stalker, some are not. Actually, only one of them is not, the rest are. So I love these indicators, and I'm going to explain why. So first indicator is Lagura, RSI. I don't know, Laguerre, RSI. I don't know how to say it correctly. I've heard it both ways. But basically, this is a more I would consider accurate version of RSI that does a very good job of indicating a possible movement of stock. So let's even look at what we got on our screen here. So we have ZS crossing above zero point 0.2 on RSI or LRSI, sorry, around 1 o'clock Eastern time yesterday. And that to me is a bullish signal. And yeah, ZS popped. So, you know, that's kind of what I'm referring to when I say that it can indicate possible direction. But it's not an exact science. When you look at any kind of indicator, a lot of people want like a golden indicator that tells them exactly what they need to do without them needing to think. They want it to say, okay, go long here, or short here, or sell here, or buy back here. But in reality, there is no such indicator that's going to do so on a consistent basis that's going to make you money over the long run. The reality is, you need to combine your analysis, price action analysis, market analysis, other indicators, support and resistance analysis, which is price action analysis or technical analysis, and you need to combine all of that and look at it like in a 3D picture in order to make like proper decisions in trading like that. It's not easy to make the right decision in these situations, but you have to be able to discern when to listen to an indicator and when not to listen to an indicator. Because if you just blindly listen to it, I can almost guarantee you're going to lose money. The next indicator I use on here is 10P. This is the start of all of the exclusive indicators that are on Option Stalker Pro. This is an indicator created by Pete, who runs Option Stalker or One Option or whatever you want to call it. And he spent a lot of time and a lot of money creating this. It's kick-ass. What it is it's similar to LRSI in the fact that it gives you a indication of the direction that a stock might go in. But the great thing about it is it's optimized to be used on the 5-minute chart for SPY. So, you look at something like this, you look at yesterday, and here's how you would use something like that. So, first off, we start the day in a bear cycle that is not very long, but starts a big bullish cycle. So, let's look at the bullish cycle. As we can see selling during that cycle. Quite a bit of it, in fact. So, what does that tell me? I just told you that it gives an indication of direction. So the fact that it's sold off is opposite to what it's saying it's going to do. You'd be correct. But that's because every indicator is not bulletproof. But the beauty of this indicator is you combine it with price action analysis. So here at the beginning of the day, I was thinking, okay, gap up, we're going to fill the gap. We did fill the gap. And then I said, okay, let's see if we get a bounce here. We did not get a bounce here. We got continuous selling. We got a I thought it was going to cross down here. It did not cross down. It actually crossed up. So then that created a bit of a bounce. It's like, okay, we just got a bit of a bounce with that cross up. Then we get a cross down, additional selling. We get a cross up, bit of a bounce again, cross down, further selling, bounce or cross up, further selling, cross down, further selling, then cross up, then we bounce. Basically, so basically the way that you want to use this indicator is you have to know what direction you plan on going in. And that you can figure out based on price action analysis. If I see that the last 4 days of SPY have been bearish, and if I see that we just took out support, we just took out the previous day's low, I'm going to be thinking I need to short. And I'm going to be looking for when SPY has a bullish 1OP cycle, I don't want to see it bounce. And if I don't see it bounce, like many times here where it didn't bounce on the bullish cycle, on the next bearish cross, I'm going to be expecting to short. That's the way that this indicator needs to be traded. At this point, I've been working with this indicator for coming up on 3 years, and I would not I would not trade without it. It's truly an outstanding, one of a kind indicator, and it's worth all the money I pay for this platform. Okay, so the next indicator that I use, I'm going to go back to a regular stock 5-minute chart here, is 10 MO. So what that is it's essentially a momentum indicator, similar to 1OP in that it's showing direction, but it's instead telling us momentum. So it's looking at like volume, and it's not predictive either. So when we look at ZS here, we can see we got a cross up on 10 MO, and we can see that it's telling us that momentum is going to the upside until about 220, which it's close, no cigar. I mean, it did pop a little bit more, and then you can see it pop more. But that's basically what that is. I don't use that too much anymore. I did use that a lot in the past, but it's something that I've always found a little bit useful, at least in order to see like what direction um, the momentum is going in the market. The next indicator I use on here is for volume. I use what is called 10 volume or 10 VOL, which is a indicator that tells me when the volume is greater than average. And if it would be greater than average on the 5-minute chart, this number right here would be positive. It is not positive, therefore the volume is not greater than average. That's basically how it works. I'm sure that if I type in a stock with insane volume, I don't know, maybe Tesla, it'll be positive. Nope, it's negative. Now I'm looking like an idiot. Let's look at Google, still negative. Let's look at Nvidia. Nvidia is positive. So that had above average volume yesterday. So that can be very helpful, especially if you do a lot of volume analysis. I look at the price action on the candles more so to tell when the volume's high, so I don't really use that too much. But I find it definitely valuable to have on my chart, and I feel like I'm going to continue using it. So. And finally, the last indicator is another indicator that I absolutely love. Let me, actually, it's not going up right now. Oops, that's not what I want. Okay, so right here we have what's called uh, 10TL or trend line. Basically, what this is a couple years ago, Harry and Dave, who, if you don't know who they are, Harry is the person who founded the Real Day Trading Reddit. And Dave is a professional trader in the option stalker chat room who has been, he's probably the longest member in the room, honestly, who's still in there and active. He's been doing this for, probably 20 years. And he's probably one of the best traders in the world with how outstanding his win rate is and all that. They they heard from someone the concept of algo lines, which are essentially connecting two high volume candles. It's a little bit more than that. Don't go out and just connect two high volume candles. I would highly recommend watching the video on the Real Day Trading YouTube channel, which is Harry's channel, and he discusses um, algo lines. That is going to be a much better way of going about that than this will be. But basically, these 1 OTL or 10 TL lines are modeled after Harry's criteria for algo lines. So Pete created this, and now we have automatic trend lines. And so what I use them for is I look at them and I say, okay, like let's say the stock price is like right here, and I'm thinking about going long. I'll take a look at this, see I have barely any room, and go, oh, nope, I think I'll stay out of that. I want to see if I'm making a move close to these lines, I want to see it through them. That's basically how I use them, and the reason why I started using them is because in the past, I would find resistance just out of nowhere, and I would always think, "What the hell? Where's this coming from?" And it would be from lines like this. And I know that I'm supposed to know how to draw these myself, but oftentimes I kind of just screw it up, and I definitely do draw lines, but I'm not sure if they're necessarily valid. So I like to use these because it allows me to see them in a second when I'm doing my analysis, and it allows me to um, make split-second decisions, so I don't have to sit around and make sure that my chart is correct and draw the lines, make sure that double check that they're correct. This makes it a lot easier, and I know it's not a replacement for um, traditional pen and paper, not pen and paper, but drawing drawing the lines on a chart. But I think it's fantastic, and I'm going to continue to use it. Um, so in general, I would say that concludes the basics of technical analysis um, section that I wanted to go through to explain basically how you like what you need to know before you have like a method or before you start studying a method to trade. What you need to know. So I hope this is helpful, and I'm going to start working on the next part, which is um, price action analysis. I've definitely gone over some of that in this video, so um, that won't be that long of a video, but I will try to get that out soon. Trade well.